Okay, own up. During the circuit breaker last year, how much did you spend on online shopping? Lazada, Shopee, Q10, these sites may have benefited greatly from you. But you know who may have been the real winners? The payment gateways like PayPal and Visa. And in this video, we will be looking at those stocks. Hey investors, welcome to The Market Talk. I'm Ali, your humble graduate from VIA. I love investing, studying about companies and market trends as well. Today, we will look into payment gateways. Payment gateways are companies like PayPal, MasterCard, Visa, Square and Alipay. More importantly, we will see how well they have done when the world was in lockdown and how their stock market performance has been. Let's start off by looking at the industry. So, COVID-19 hit our shores, our little city went into lockdown or circuit breaker. All was not bleak though, because many turned to online shopping for their needs. Online shopping sites like Lazada and Shopee definitely benefited from the sales for household and entertainment items. But people even turned to online solutions for their groceries, toilets and other needs. Online stores like FairPrice, Sheng Siong, RedMart were all winners. But to think about it, their reach was limited to Singapore only. Surely similar sites like these exist in other developed countries. For example, Malaysia had Lelong.my, Thailand had YouBuy, and so on. When we dig deeper, we find out that the real winners were not these online stores, but the payment gateways supporting these companies. So, what are payment gateways? Just in case you are still lost in this video, let me explain to you what a payment gateway is. A payment gateway is the technology that captures and transfers payment data from the customer to the acquirer. It is basically an online credit card reader, except some of these gateways do more than allow you to swipe your credit cards. Some payment gateways now have prepaid credit systems, coupon and voucher discounts, and much more. So let's have a look at how the payment gateways are faring. We will have a look at PayPal, Visa, and an ETF called ProShares Online Retail ETF. But let's start with PayPal. PayPal's stock price has doubled since the dip from last year, going from $100 to $200+. Because its business is 90% software, it's able to maintain a healthy gross margin, almost 50% consistently over the years. Revenue as well grew year on year by 20%. But astonishingly, the net margin was the biggest winner. It grew by 70% year on year. Another home brand is Visa, ticker symbol V. While Visa's stock has seen a rise, it hasn't been meteoric by any measure. It's a smooth climb up, if you ask me. The stock price has risen from $150 to $220 in about a year. However, a major factor compared to PayPal is to note that Visa is a behemoth in the payment gateway world, currently with a market cap of $478 billion. So a slower growth rate is warranted. Strangely, however, all does not seem normal when we look at the fundamentals. Financial year 2020 saw a dip in revenues and net profits for the company. However, all is not lost. Visa is a consistent and safe dividend builder if you are looking for one. So, we talked about individual companies. What about ETFs? While individual company business models require a lot of study and detail, we can go to the ETF way in pooling money to buy the rise of payment gateways. In this regard, there is one ETF that has caught my eye. This ETF is the ProShares Online Retail ETF. This ETF might be a one-stop shop, pun intended. This ETF has seen a rise of stock price of 100% in the span of a year. However, the ETF fund managers has not strictly stayed to investing in payment gateways. They have also invested in online retail stores. Amazon is the stock of the highest percentage in weightage, roughly 20% of the ETF. So, in conclusion, firstly, stock price isn't everything. While payment gateways have benefited by leaps and bounds, the news should not be generalized for every payment gateway company. Some payment gateways were specifically positioned to handle the demand of home shopping more than others. As value investors, don't get distracted by growth only. Do your study and understand the fundamentals. Secondly, online shopping trends. The silver lining is that the COVID-19 pandemic has made online shopping a mainstay for time to come. Some data also shows that Americans that have shopped online will grow from 69% of Americans to 91% of the population by 2023. This does not mean smooth sailing for all online payment gateways. So while there is a demand, it does not mean smooth sailing for all online payment gateways. Where there is a demand, there will be competitors. Recently, a company called Stripe, which is a startup in the field, closed another round of funding valuing the company at $95 billion. The company still has a lot of runway until it goes public, and by then, we might be looking at another giant. So, I hope you enjoyed this video on payment gateways. Before you go, share with me in the comments section, what are the payment gateways that you usually use? And during the lockdown period, what is the shopping that you did? Before you go, do remember to like and subscribe to our channel. Thank you everybody, and see you in the next video.